Let me start with the observation that, as Philisiwe Buthelezi said earlier, the inclusion of the majority of South Africans in the mainstream economy has already provided the driver for a lot of growth amongst both small, large companies of all sizes. But that's not going to be sufficient to attain the growth aspirations that we have, and particularly the job creation aspirations. And we share that with all African countries, the great need to generate more jobs for each percentage of growth. We don't have labor-intensive growth at the moment. But I'll come back to some of the structural changes that we need to make to the South African economy. I want to just emphasize a number of the points that were made earlier today. If I take a snapshot of my career in business, in 1994, of the 90 or so companies in my organization, perhaps less than 10% were active in Africa. Now pretty much 100% are not just active, but look for the majority of their expansion on the African continent. This is pretty much the foundation stone for their growth plans going forward. And they've already done a significant amount of investment, and they're seeing a lot of opportunities. But really, this is in an Africa that up to now is still mostly 54 sovereign nations. To really optimize the opportunities, we need to do the things that we talked a little bit about this morning, and that is to put in place the basic building blocks of regional integration. And I'm not talking about the fancy institutional structures that Europe has, or indeed, God save us, common currencies. I think we're going to take some time out on the African common currency for obvious reasons. But really, the rather boring nuts and bolts of trade facilitation, common visas, all those border crossing issues that hold up and add so much cost to moving the factors of production between various countries in Africa. If we were to tackle those, then within relatively brief time, and we are committed to doing this in terms of bringing together 3 of the major regional groupings. Southern Africa, 250 million. If you add in COMESA, it's 550 million people. If you add in ECOWAS, then you have 800 million plus. Now you're talking very sizable markets which are of very great interest to major corporations. So I think this is an agenda that we really have to pay a lot of attention to. Returning to South Africa and the high growth, labor-intensive aspirations that we have, I think all the major analyses of the South African economy over the past few years have really stressed half a dozen key structural constraints that have to be faced. Firstly, we have a very poor educational system. We spend a lot of money, but it's ineffectively deployed. We have to get the quality up. The quantity is not a problem, it's the quality of education, so skills. There's a raging debate about labor law, but one thing is abundantly clear, is the incentives to employ young people are not there. In fact, there are a whole range of disincentives. And this has to do partly with the mismatch between wage rates and productivity issues, so we have to address those. Then we have bottlenecks in most of the major network industries, and these are absolutely fundamental foundation stones of economic expansion. Our transport costs are too high. The networks are not as efficient as they should be, not as pervasive. They need a lot of upgrading. We've had energy shortages. Now, this is the old story of both, on the one hand, challenges, but also opportunities. There are now enormous opportunities in energy generation, both in the conventional and now in the renewable and nuclear. We've decided to stay with nuclear, so nuclear is going to be a big space for us. Communications too, we took too long to modernize in that area to get competition there. More openness and more competitiveness. The OECD stressed this, our Harvard panel stressed this. But that, of course, applies both to the private sector and to the state sector. The state sector needs, I think, to open more to contestation. We need to have more emphasis on public-private partnerships. Of course, we know it's much easier to talk about these than to implement them. We heard earlier what the track record is of major PPPs. They take a lot of effort over a long period of time, and many fall by the wayside. So these are some of the structural constraints that need to be faced down, and of course they require high-level leadership, they require political will, they require clarity of vision, not always easily attainable when you have essentially coalition governments of many different persuasions, all pulling slightly different directions. So these are issues, as we heard earlier. The macro and micro reforms have to proceed in tandem. Governance is important. We share these with many other African countries.
Doing business in Africa. You can't afford to be without Africa Investor.